Recovery. They've been a partner of ours for a few years now with a core focus on work opportunity tax credits. But in addition, now they have taken on assisting with employee retention credits, which is part of the CARES Act. So Adam's going to take us through and explain exactly what employee retention credits are and how they can help everyone with the entire process. So Adam, I will turn it over to you.
Thank you, Christina. Thanks everyone for being here. Just to give you a quick background on EF cost recovery, we focus, as Christina said, our core business is the work opportunity tax credit, which will have some applicability to Long John Silver's. And then we have the research and development tax credit, which really isn't pertinent to anything that you all are doing. But then, you know, as programs pop up and we see a need for assistance in the marketplace, we'll put different programs together. And that's what we did with the employee retention credit, which is what we'll dive into here. I promise not to take up too much of your morning, so we'll get right into it. Kelly, if you just want to go to the next slide. So what is the employee retention credit, or ERC as I'll refer to it? It was put in place as part of the CARES Act back at, you know, it's crazy to think it's been a year, you know, March of 2020 as part of the CARES Act, they put the employee retention tax credit in place. However, very little attention was paid to it because at the time you could not use the ERC if you received PPP loans. So that law changed at the end of 2020 as part of the Consolidated Appropriations Act, and they made it so that you were now eligible. The ERC is, you know, it's not an income tax credit. This is a fully refundable payroll tax credit. So it's realized through either including the credits on a timely filed 941 here in 2021, an amended 941 in 2020. There's also other mechanisms to request advance refunds through, you know, 7200 filing and things like that, which we can get into. But right off the top, I want you to understand that you don't have to have the income tax liability to take advantage of these credits, okay? Because they're fully refundable and they're realized through your payroll tax filing. Who's eligible for the ERC? You know, anyone who retained employees, continued to pay them during 2020 and here in 2021 while you're eligible. If you just go to the next slide, I think we can dive right into. So this explains eligibility. We have to look at things completely different. So two different silos for 2020 and 2021. We'll touch on 2020 first. To be eligible for the ERC, you have to meet one of these two criteria, not both. That's an either or. So number one, you either had to have operations that were full or partially suspended as a result of a government order, which will be almost all of you in the restaurant space. Or you have to have experienced a significant decline in gross receipts quarter over quarter in comparison to the same quarter in 2019. And for 2020's purposes, that's a 50% decline. Now, once you meet these eligibility criteria, there's no maximum employees you can have. You know, theoretically, you could have 2,000 employees. However, there is a threshold where the credit becomes much more lucrative. So if you have 100 full-time employees or less, you can use wages that you paid to everyone, working or not working. If you had more than 100 full-time employees, we're only going to be looking at wages that were paid to employees to not work, so people that were furloughed. For 2021, they really opened it up. They made it easier to qualify. So you still have your full or partial suspension of operations criteria. But if you didn't meet that, now your reduction in receipts only has to be 20%. And that 20% is still comparison to 2019. So you're going to compare these numbers to pre-COVID levels. Okay. And they bumped up that 100 full-time employee threshold to 500. So it's really expanded, and it's a program here in 2021 is fantastic. Let's touch on the next slide, please, Kelly. How much can we get? Skip right past this. I think the next slide will show us a breakdown. So what is this worth to you? In 2020, it's worth up to $5,000 per employee for the year. In 2021, it's worth up to $7,000 per employee per quarter. So that's important to know. As long as you remain eligible, you can earn up to $7,000 in a refundable payroll tax credit per quarter per employee. Originally, when they made these changes to the program at the end of December, they extended the ERC. It was set to expire December 31st, 2020. They extended it then until the end of June. And then just recently, about a week and a half ago, they extended it actually through the end of the year. So as long as you remain eligible here in 2021, you'll be able to recoup up to $7,000 per employee per quarter. Now, this is an example that something that we just completed probably 3 weeks ago. This is an 11 store, it's not along John Silver's. This was a Dunkin' Donuts franchise group up here in the greater Boston area. They have 11 Dunkin' locations, 265 employees. So when we first talked to them, they're like, well, we're way over 100. But when we applied the full-time employee test, they were well under 100. So that opened them up to all of their wages, the entire bucket outside of what was paid for with PPP funds. So that resulted in, they had $986,000 in qualified wages, and just their 2020 ERC alone was $493,000. That's with 11 locations. So before we jump into the summary, I just want to point out that, there's no slide in here, but I just want to there are a number of moving parts you need to take into account when looking at this. You cannot use the same wages in the calculation of ERC as wages that you use PPP funds for. If you're currently participating in the work opportunity tax credit, you can't use the same, there could be no duplication of benefits, essentially. So you can't use the same wages that you may be using in a WOTC calculation. Although you're going to want to kind of put WOTC on hold while you qualify for ERC, because you'd rather have 50 or 70% of those wages than 25 or 40% in a WOTC calculation. If you receive any of the COVID-related tax credits for family leave or sick leave, those wages need to be backed out. So there are a number of moving parts here, which is why you'll want to consider someone like us. What we'll do is we'll evaluate and determine your eligibility for the benefits and credits, determine and calculate the credits, and then we'll provide, the reporting of the tax credits. So whether that is us filling out and filing on your behalf an amended 941, if that's in a current quarter, if we're going to file for an advanced credit on a 7200, or if we're going to communicate with you and your payroll company to incorporate the correct figures on your timely filed 941. That's all going to be part of our process. And then in addition to that, we provide no cost audit defense. So, is this going to be a high risk audit item today? Unlikely. The IRS has, this might be the only time I actually feel pity for the IRS and feel badly for them, because they just have so many things on their plate right now. So this isn't going to be high on their priority list to poke around at. But, like anything tax related, they have a statute of limitations of 3 years. So, 2 years down the road, there's no telling that they may put a division together and decide to poke around at a few of these things. And if they do, and you're a client of EF Cost Recovery, we will defend this and support it on your behalf. If there are that kind of wraps up my spiel. I promised you I'd be quick. I'd like to encourage questions. If anyone has any questions, they want to put them in the Q&A. I'm happy to, open it up and answer any and all questions that you may have. Our fee schedule is all success fee based, Dave. So that percentage varies depending on obviously the size of the credit and the amount of work we're going to have to put in on our end. That fee schedule typically ranges between 12 and 5%, 12 and 15%. Some of our other common questions will surround, can tips be included in the calculation? The answer there is yes. Any claimed tips you're paying tax on those wages essentially. So we can include that in the calculation.
Adam, if anybody on here wanted to get started, what would be the next step be?
The easiest step is to just send an email to ERC at EF Cost Recovery, and either myself or one of my team members here will get back in touch with you to schedule a quick call to just learn a little bit about you and your network, and then just dive right into the work once we're engaged. We have ADP for payroll processing, so you'll work with them for the data. Yes, David. So what most clients do is just get us access to their, either their ADP, Paychecks, Heartland, whoever they may be dealing with. We'll get direct access to their portal. We will generate the reports that we need on our end to do the calculations, and we'll need to get, some prior quarter 941 paperwork. So we'll be able to pull all that stuff directly from ADP or whoever your payroll provider is. In terms of timeline, so that everyone understands, internally, it's probably a 2 to 3 week backlog at this point for new clients coming on board to get us started into production. In terms of processing times with the IRS for an amended 941, so a 941X, that's likely going to be 4 to 6 months for processing. They're just completely overburdened with work, frankly, and they're slow to begin with. So I'd expect 4 to 6 months processing time for an amended 941. At 7,200, which is a request for advanced refund. If we were to file it for you, to say the beginning of the second quarter, to try to get money into your hands as quickly as possible. They're supposed to be turned in 2 to 6 weeks. What we're seeing right now is 4 to 8 weeks. And then there's also, you have the options to get this thing included on a timely filed 941. Or you can, even if you wanted to throughout the quarter, reduce your, what you're paying in Social Security. So you can turn your withholdings off. Kelly and Christina, I don't see, there's no other questions coming in. I'm going to put that email. I'm going to put the general ERC email and my personal email in the chat in case anyone wants it.
And in case you guys close out and miss that, you can always also email Christina.
Yeah.
I think most people have her contact. And if any other questions come up, don't hesitate to reach out after the fact, after you've processed the info and you get with the team, you may have other questions, you can always ask.
Yeah, I mean, we're
Yeah.
always we're here to help, even if it's to answer a couple questions before you decide whether or not you would like to, engage us. If you just have a couple questions on a little bit further in depth, happy to answer them for you.
Yes, and we will also
David says he'll be in
send
touch.
out.
Very good.
Yep. So we will also send out the video if anyone that's on needs to share it with other team members. And also obviously the contact information will be there as well. Okay. Well, thank you all so much for joining. Thank you, Adam and Kelly, for taking us through the slides. And we look forward to hearing from all of you soon.
Thank you, Adam. Thank you, Christina. You guys take care.
Thank you.
Thank you,
everyone.
Kelly. Thank you,
Bye-bye.
Christina. Take care.
Thank you. Bye-bye.